Hey folks, how are you? I'm gonna try and do a little bit of a trade review here. So here we go. I traded the SPY and I shorted calls to start. So I started with a short call trade and I pretty soon after covered my short call for a tiny loss. These are my trades. So I shorted the 293s at 10.14. So they were just slightly out of the money. And the thesis of the trade was the fact that SPY was still in a 5-minute downtrend in the pre-market. I was basically using this chart as a reference, SPX 500 USD. Basically what we saw was an initial move lower, I guess, on the open, and then we tested this 290 low, which was just about the low of yesterday too. So when I saw that bid hold around the 290, I was about to go bullish. Actually, I was about to short the puts at that point, and that would have been a great trade that worked all the way until noon, actually. So I didn't take that trade, I guess, because I wasn't convinced for some reason. If I zoom out and look at what the Qs are doing, at that exact moment, the bid they were holding was around 218 and the financials was here 22.72, and we bounced considerably off of this level right here. Considerable rally, although the XLF managed to break higher, the Qs just came up for a lower high in that 5-minute downtrend that preceded the open. What happened after that is that the Qs kept holding the offer right under 220, I'd say. So the high of that candle, yeah, it was around 219.80, 79, 92, and we weren't able to get to 220 at any moment during the day, okay? So that held off for, it was at 219.50 that I was watching for the majority part of the day, in fact, and I was expecting it to lift. You can see it tried to lift there again and then failed. We had a bear break and then this huge bull spike again into this 215 area, 219.50, whatever you want to say, and again into a failure, and then another attempt right there off the low. So you can see this kind of chop right here. This will kill a lot of traders. This will kill a lot of option premium. So basically I found myself in a trade that was unlikely to follow through. And that's the thing with long options, right? So my initial position was a short option trade, right? So the 293s on the SPY and I had the 295 for protection. But the thing is, what made me want to cover the trade was when I saw a huge pop down from these lows. So basically I covered that short call at 1030, which was basically on this pop right here on the SPX. You can see this pop where we came up higher, but as you can see, that pop got no follow through and we just ended up losing the bid at 292. So at that point, my call that I had long, because I had covered the short calls but not the long calls, it was in the red basically, and I held on to it for a while, and actually there was considerable profit at some of this point. There was profit here and I had the chance to get out break even or even for a small profit up here, and obviously that didn't come through and I didn't cut it, and I managed to cut it down here after it was so clear that when SPY was breaking support here that obviously I'm not going to be staying in the trade at that point. Now good on me for getting out there, because that would have, if I would have held there, now you're really being a bag holder, obviously, right? You shouldn't be trading. Like you need to get back to the drawing board. If you're going to be holding long calls after a bear break like that, you need to get back to the drawing board and do your stuff, right? So my exit was all right, but at the same time I didn't like it so much because I was holding the bag basically after this move. This 292 area never broke. The financial sector was relatively bearish. I was watching these offers, these bids and these offers coming here in this sort of descending wedge formation. It was 2293-ish, and then we were kind of testing it here, down here. I remember the bid was holding 2290. They were testing it. They would pump it, hold the bid, drop it by 1 penny, go a bit higher, drop it by another couple of pennies. Then you get a huge bull type of thing on some crappy volume, get right to the moving average, right to that 23 area. And I was saying, through all of this, I was saying, as long as 23, if 23 can break, that'll give fuel to the SPY bulls. But if 23 can't break at all, and that's what would happen when we rejected 23, well, that's what we saw. We saw lower prices. So guys, that's right there. That's tape reading, okay? You can't see this stuff on the charts. That's tape reading 101. And it was happening on the Qs and the financial sector. 219.50 was not, all right? And then it was 219 basically. So you saw 219.50 rejected, come up, reject it. And then up here it was 219, the bid. They let it fly a bit up to 219.80 or so, and again inside bar. Then we came but slowly faded back down to 219 because this offer could not lift. The bulls didn't have the power to lift that. All right, that, I guess, you know, it's hard to see that when you're in a trade, and that's why I prefer to be short options than long options most of the time, because, well, obviously I'm not going to be sitting around waiting for a move to happen when I'm in a short option. I mean, I don't mind sitting around waiting for a move to happen because I'm making money as time progresses, and these option premiums are slowly decaying. That's the edge in trading short-term options. It's understanding the tape and the held bids, held offers, and everything, and just kind of selling those options that are likely to expire worthless. So basically, I guess you could say that I tried to be too Mr. Tough Guy by holding on to the long call and expecting a higher move, and just not realizing the kind of risk you're undertaking when you do that kind of thing. And you know, like, I don't really have a set fixed strategy that I trade. I have a couple of sort of strategies that I trade, that are the way I think about trading. But you could say that my strategy is a bit of a hybrid. And because I have a bit of a creative background, I guess I'm comfortable in that idea of how I can fuse strategies. So like, I'll be in like a premium collecting trade, and then I'll just kind of scalp around it, right? So it's generally collecting premium with sort of a scalp nature to it, right? So like, I don't mind covering short strikes and then profiting from long strikes, but the thing is, I need to realize is that when you're long a certain option, one of these options expiring today, they could have a lot of delta, and there's a lot of risk there if you're holding a long option and the price is not moving. So unfortunately, you need to be more nimble with getting out if you decide to do something like that. And the only time would be if you really believe that there's a high likely chance that that option that you have long is gonna, or has the potential to actually end up in the money at some point. And in order for it to end up in the money, you want to see some liquidity being swept on either side. So yeah, basically I'm red in the account by 12%. And that was my day. So I guess I failed to manage my risk again by holding on to the long strike and kind of letting it ride too much. And then where I stopped out was a point where that long strike was absolutely getting crushed, obviously, right? Or just under, no, actually the break-even price on the long strike was around 95 or so. I remember that. And there were some moments here it was trading around $1.08, $1.10, $1.05. And I didn't take any of that off. I didn't nor did I put any break-even stops, you know? And that's just bad behavior. Like, unfortunately, sometimes when you think something is likely in the market, there's always a better trade than being in a long option expiring tomorrow. There's always a better trade. You can either go further out, you can either sell puts, you know, there's always going to be a better trade than being in a long option short-term expiry expecting a move of some kind, right? And again, I was expecting an up move here because there was a lot of short interest in sort of this area, and I was looking at the cues. I mean, look at this chart. You can see short here, short here, short here, but not necessarily, right? That's just them protecting the offer. But at the same time, smart money was shorting there clearly, or just kind of, that's where they were putting on their hedges, because that every time it would get up to that 215 area, they would just sell, sell, sell. Again here, slow sell, and then finally took out the longs, right? Poor risk management, again, by allowing that long strike to just go too long and not cutting it at, you know, break even, obviously, or not like slightly below break even, just kind of allowing too much leeway in that trade. The delta of those options I was holding was way too much for my account. You know, they were like 30 delta each, and like, I usually trade options, I prefer to trade like 20 delta max, you know, and these are 30 delta, so they move much more. So, you know, poor risk management, what can I say? It's always the same deal. And yeah, I'm good at picking winning trades, but when I have losing trades, I'm horrible at managing the risk. So, you know, guys, it's like, this is trading for you, you know, like, people try to sell trading and try to make it look like amazing with all these Lambos and stuff, but right here, guys, this is the true reality of trading. You gotta learn and understand here, and is that all the glory will come eventually for those who are willing to sit through this kind of crap every single day, right? So you need to learn how to take losses, and that's why I like to play certain competitive video games like Dark Souls, because it helps you keep your ego in check a lot of the time. All right, guys, so I'm gonna leave it there for today. I basically showed you my entries. I shorted the calls here. I covered the short call here because I thought we were popping up. And then we came back down, and I was long the calls left over in the spread, and I let them sit for a while, and eventually I cut them when we saw this final bear break here, obviously, because at that point, Qs were losing the bid, XLF was losing the bid, selling was coming in, and I'm not going to be holding on to long calls if we're getting this kind of a bear break out of this range, you see? So that's pretty much it, guys. Red on the day. I wish you a great one. Take care. Hope you liked the video. Cheers. Bye.